The question is, what does that mean? Is this the beginning or is this the end? What does a crystal ball say? And our very special guest today is Jim Rogers. He's been on our program a number of times. He is personally, for Kim and I, one of our idols. We were with Jim Rogers in Washington, D.C. back in the 1990s with Steve Forbes and James Dale Davidson, and we were talking about a lot of the things that are happening today. So it is very exciting to have Jim Rogers on our program today. He's a legendary investor, and he is one of the smartest people we know. So we're going to be talking about, what does Brexit mean? What does it mean to you and I? What should you do? Any comments, Kim?
Well, I'm excited to talk with Jim today. He's also the author of Street Smarts: Adventures on the Road and in the Markets. And I remember reading the book years ago called Investment Biker, where
one of my favorite books.
Yeah, where Jim and his lady friend went motorcycling all across the world, looking at what was happening in the different markets. So what I love about Jim is he goes to these places. He's hands-on. He's talking to the people. He's in the markets, not just seeing it from high above. So I'm excited that we have Jim Rogers on today. This is going to be fantastic.
So for those of you who are concerned about your future, there's one guy called in a couple of sessions ago, says, how is my job safe? I said, probably not. If you're thinking about it, it's probably not safe. But Brexit is, in my opinion, the beginning of the end as we know it. So we're going to hear from Jim Rogers, his comments, what he thinks all of this means. So Jim is in Singapore, which I always thought was interesting. But Jim, what does Brexit mean, and what does your crystal ball say for the future?
Well, Robert and Kim, I'm startled. Are we old enough to have known each other in the 90s?
Oh, we were just kids.
Just kids.
How could that be?
That was an exciting event to be with you guys. It's really eye-opening. But here we are today.
Well, we are indeed. What's about to happen? Well, you should be very worried. You should listen to your program, because the world's about to come to an end. You better everybody better get prepared, because a lot of us are not going to survive it. I hope I do, but many won't.
So what does Brexit signify to you? I mean, what does it mean?
Well, Robert, let's forget Brexit for the moment. The world, in the U.S., we've had economic setbacks every 4 to 7 years since the beginning of the Republic. We always have them, despite what politicians and brokers tell you, and we always will. We had our last one in 2008 or so you can see that the world has been going a long time without any collapse. Secondly, it's all been artificial. It's been built on money printing and debt. There's no substance to what has been going on, and most places really have not recovered in any significant way. Most places in the world, not just in the United States. So the world's been coming to a point where something is due to happen, despite it's only held up because of the artificial money printing and gigantic debt. Everybody talks about austerity, but there's been no austerity. Every country has higher debt now than it did last year, and will have higher debt next year. So we're floating around on an artificial sea of liquidity and debt, and it's been going on for 8 years since the last time. That's the preface to tell you that the world is heading for problems. And when we have bear markets, as you know, throughout history, something comes along and triggers it, and we think it's always going on underneath anyway. So this time around, if we look at the United States stock market, and this may be more than you asked for, Robert, but hear me out. The United States stock market has been going sideways for 18 to 24 months, if you look at the advanced decline or other indicators. So in many circles, that's known as distribution. In other words, the smart guys are getting out and selling to the not-so-smart guys. And after distribution, if that's what it is, you usually have a nice collapse, especially if it's a 2-year distribution, as this one has been. You already have problems in the world. Japan is already in recession, according to its government. Parts of Europe are in recession. Parts of America are in recession, as you guys well know. So we're heading into economic problems no matter what. Let's suppose we never had Brexit. We still are going to have a bear market and significant recessions around the world and problems. Now, to the immediate story, along comes Brexit, which has happened, and it is now causing turmoil in the markets. But if it hadn't been Brexit, it would have been something else in the next few days or weeks or months. So Brexit is now causing great turmoil, and it's one of the straws that breaks the camel's back, and it's going to cause lots of problems. You'll have Scotland leaving the UK soon, which may mean Northern Ireland leaves the UK soon. Now, the UK has huge debts and has a balance of trade deficit and a government deficit, a big one. If they lose Scotland, they lose the Scottish oil, and that's a lot of their income. And then the City of London, which is their financial district, is going to get whacked by Europe, because Europe is not going to sit around and say, hey, you guys make all the money and you left us, and now you're going to make all the money. That's not going to happen. So the UK will turn into England, maybe England and Wales, with huge deficits. The pound will go to, you pick the number, 50 cents, 10 cents. I don't know where it'll go. It'll go down a lot. And that alone is going to add to the bear market. But in the meantime, we have a lot of other things going on in the world to cause the bear market. So it's going to be the worst in our lifetimes.
Wow.
Wow. Oh. The worst in our lifetime.
Yeah.
Well, remember, in our lifetimes, we just commented that we're very young people, so we haven't been around very long. But so far, the worst in our lifetimes was probably 2008. Well, it's going to be worse than that, because the debt is so much higher now, Robert. You remember how bad 2008 and 9 were? Well, the debt has skyrocketed since then.
And I just found out that, this is a little off the subject, but Dodd-Frank brought back in derivatives, and they're still trading in that. There's no control over them. So that's even bigger than, which is beyond my brain. So the question is most of our listeners do not operate at your level of sophistication. So what do you say to the average person running around right now, trying to make his payments, getting his kid through school, and planning for the future? What does all this mean to that person? Yeah,
and especially if you're saying in the next 8 to 12 months there's going to be a recession, you're guaranteeing that, you've said. What does it look like, and what do people do?
Well, first of all, get prepared, become knowledgeable, listen to Rich Dad.
Very smart.
I'm listening to you right
smart
now.
Advice.
That will get you started. Then you'll become knowledgeable, and then you'll get worried. I hope you get worried. And then you'll start getting prepared. Now, how do you get prepared? I will tell you what I'm doing, but nobody should listen to me, Robert. Maybe they should listen to Kim, but they shouldn't listen to me or even you, because you've got to invest in what you know. Don't listen to some guy on the internet or the TV or the radio. If you do that, you're not going to be really prepared. So figure out what you know best, and then figure out how to protect yourself.
That's what we want. Yes, go ahead.
I am short stocks in the United States. I own no stocks in the United States. I own a lot of U.S. dollars. I am short junk bonds in the United States. I own some Chinese shares and some Chinese currency, not a lot, but some. I have a smattering of shares around the world. I also have shorts in Europe, and I'm figuring out, how to get more protection on the downside. I own very few stocks. As I said, I own none in the U.S. I own very few stocks. You may say, why are you shorting the U.S.? Mainly, and that's because the U.S. stock market is the one that's at all-time highs. The Japanese market is down, 70 or 80%, et cetera. So I'm sure your parents taught you to buy low and sell high. So I hope I am selling high. And I'm mainly selling the stocks, those stocks that never go down, Netflix and Amazon and whatever those names are. Everything else in the U.S. has started deteriorating. So I'm shorting the ones that haven't gone down.
Once again, it's Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. Our guest today is legendary investor Jim Rogers. He's somebody that Kim and I have watched from afar for years. Tremendous respect his points of view. He does not he is not what I would say politically correct. I've watched Jim on CNBC just go a counter to what some of those guys are promoting. So that's why it's always, a great thing to listen to a great man talk about what is coming next. And so this is my other question then, Jim. The thing you talk about, you have to do what you know, which we agree with wholeheartedly. But the average person doesn't have your skill set to go short. Would you agree with that?
Well, yes, many people don't even know what it is, and
Yes.
many people think it must be illegal. But it's not illegal. It's perfectly legal and moral, and it's actually good for markets. But if they don't want, my advice is to learn how to sell short. And
Right.
now, Robert, there are ways you can sell short which are not quite so complicated. You can buy ETFs, which actually go up if stocks go down, and that makes it a little simpler to do it. But if you don't want to sell short, that's fine. But stay with what you know, and if you don't know anything, put your money in the bank or wherever you go. You got to make.
Well, that's
sure
a good
you put your
point.
money
Where
in
is
the
it?
bank.
Where is
You're
it?
the right currency.
Yeah, where is it safe and secure? Is it safe and secure in banks? If you're
But
talking about this crisis coming,
But Jim is saying the dollar should be secure for a while, right?
For a while, but what's going to now, Robert? You mustn't understand. I know you understand that the U.S. dollar is a terribly flawed currency.
yes.
America is the largest debtor nation in the history of the world, and the debts are going through the roof. But most other currencies have been ruined by politicians also, and still people think of the U.S. dollar as a safe haven. It's not, but they think it is. And when we have turmoil, people seek a safe haven, and they're going to go to the U.S. dollar. U.S. dollar is going to get overpriced. It may even turn into a bubble, depending on how bad the turmoil is. I hope that I'm smart enough to sell and put my money somewhere else when that happens.
Oh, boy.
But let me go back to something Kim raised. You got to be sure of the bank, too, because these days, many banks, not just in the U.S., but around the world, are not very sound. The world has changed dramatically in the last 20 years, 30 years. So you got to make sure your bank or your financial institution is okay and not just FDIC insured. Even FDIC is problematical. If we have a real crisis, the FDIC cannot pay off unless they just print money. So you got to make sure you're in the right currency and the right bank.
Once again, Robert Kiyosaki, the Rich Dad Radio Show. We're talking to legendary investor Jim Rogers. Our favorite book is Investment Biker, and his other books are Street Smarts, Adventures on the Road and in the Markets, and A Bull in China, Investing Profitably in the World's Greatest Market, came out in 2008. Street Smarts came out in 2013, and his website is jimrogers.com. So we'll come back. We'll be going more into, which Kim and I wholeheartedly agree to, you better start.
And he has got
funny.
he's got the interviewers shaking in their boots because he has no alliance to any firm, any financial firm or financial institution or products, and he has his own agenda is just to tell the truth of what he sees. And so when when somebody says something he doesn't agree with, he lets them have it. And it's very refreshing, very refreshing.
Yeah, Jim, you're our Donald Trump. You know what I mean? You just keep everything stirred up out there. But anyway, Jim is American. He was associated with Mr. Soros, and he now lives in Singapore, which we've always thought was interesting, and he's raising his daughter to speak Mandarin.
I have two daughters, and they both speak perfect Mandarin. So that part of my quest has been successful.
Congratulations. So before we go on, would you quickly explain to the people who may not know what a short means? Because most people know what long, but they don't know what short means.
Well, I'll be brief. Robert, most people buy things and they go up and they sell them and they make money if they get it right. You can also make money when things go down. That is called selling short. If you buy something at 5 and it goes to 10, you make $5 when you sell it. But you can also sell something at 10 and buy it at 5. Now, your next question, it's the same thing. You bought and you sold. You just reverse the order. You sell it first. Your next question will be, well, how do you sell it if you don't have it? You borrow it. You go to your friendly broker and say, I want to borrow 100 shares of XYZ and I want to sell it at 10. And he says, okay, here it is. You can borrow this share. Now, you got to pay it back. You definitely got to pay it back. But when it goes to 5, you buy it at 5. You pay the broker. You give him back the shares, and you made 5, just like when you bought it at 5 and sold it at 10. Now, you need to know quickly that if you buy a stock at 5, it can only go to 0. You can only lose 100% of your money, and it can go up many times. If you sell short, it's quite the opposite, because the most you can make is 100%. If you sell it at 10 and it goes to 0, you've made 100%. But Tim, Robert, if you sell it at 10, it can go to 20, it can go to 50, it can go to 100. Your losses can be infinite. which is why a lot of people don't do it. There are many reasons they don't do it, but that's one of them.
So
Just briefly, there are also ways now that you don't have to worry about that risk of losing infinite amounts of money. There are ETFs. They're listed on the stock exchange that you can buy, and they will go up if the stocks go down.
So they must be high price right now, those ETFs, right?
No, remember the U.S. stock markets, the averages are near all-time highs.
But the ETFs are
depressed.
But the ETFs that go short would be expensive.
You want to short. You want to sell something short that's expensive. You don't want to sell cheap stocks short. You want to sell expensive stocks.
No,
that's the whole thing. You make a lot more if you sell expensive stocks than if you sell cheap stocks.
Basically what you're saying is when you short, you're betting against that company or that stock.
You think that company, something is going wrong with that company and that industry. If the New York Giants are playing the
How did you know my team is the New York Giants?
People bet on those teams all the time. If you bet for a team, you're betting against the other team.
Right.
So people do it, subconsciously all the time.
Yeah, our point here is this. There's things you can do when this crash comes. And, obviously when the crash comes, Jim's going to make a lot of money because he can make more money when it comes down faster than it can go up. The problem is if you don't know how to short, you shouldn't do it. Isn't that the lesson, Jim?
Absolutely. You should not do anything in the financial markets if you don't know what you're doing.
Right.
But I hear stories all the time of people who said, my broker said, my friend said, don't listen to them. Stay with what you know and nothing else.
Right. Like Kim and I love real estate, and that's what we stay with. We understand the market and all this stuff. We know we can get hammered like anybody else, but we're not jumping in as newbies. We've probably been at 30 years now. So that's what we love and we stay with. And I'm also got completely out of the stock market last year because I could see all this stuff coming. I just don't know where it's going to go, which is why at the Rich Dad Radio Show we're talking to Jim Rogers to figure out what his crystal ball is saying for the future.
So that's our question, Jim, is where do you see this going? And when you talk about there's going to be a recession in the next 8 to 12 months, what does that look like? I mean, I know in 2008 when the whole foreclosure thing happened, people were leaving their homes and there was pets in the houses and pools were left and they turned green and cheap real estate was all over Phoenix and Las Vegas. So the recession happens. What does that look like? And beyond the recession, what do you see?
Well, the next time around, it's going to be worse. You're going to have more bankruptcies, both individual and companies going bankrupt because there's a lot more debt in the system now than there was before. A lot of debt is floating debt. I mean, the interest moves with the price of interest rates, and interest rates right now are the lowest they've been ever in recorded history. They're very artificial. They will go up. So a lot of people are going to get whacked in two ways. The economy is going to get bad, but their interest payments are going to go higher and higher and higher, very high in my view. So they're going to get whacked in a lot of ways. So you're going to see more bankruptcies, which means more turmoil in the stock markets and the bond markets. Many people are going to lose money in bonds, which they think are safe. So that's going to be a mess. Stocks are going to go down. It's going to lead to ultimately the next time around, we're going to have more social unrest. You may remember there was some social unrest before. Some governments collapsed. Some countries collapsed. Iceland went bankrupt. Ireland went bankrupt, as you may remember. So we're going to have more of that. Governments collapsing, some countries collapsing, maybe even disappearing. I mentioned England before, that the United Kingdom will probably disappear as we know it. So no, it's going to be interesting times. The Chinese curse. May you live in interesting times.
We're
going to live in some interesting times.
So is there any fix to this whole thing, or is it a house of cards that's just going to inevitably come down?
Well, unfortunately, Kim, for most countries, including the U.S., it's now a house of cards. The longer we delay it, the worse it's going to be. If you get cancer and they amputate your arm, you're probably going to live a long time. But if they don't amputate your arm, if they put a Band-Aid on it, you're not going to live much longer at all. And unfortunately, we in the U.S. have gotten into such a terrible bind. I mean, let's suppose somebody ran for president and said, we got problems. We got to take pain. We got to suffer. We got to sort it out. She won.
They'll never get elected.
Well, I was going to say, let's suppose that with the body politic got sane and she got elected. after 6 months or a year, people are going to say, oh, wait a minute, we didn't know it was going to be like this. You didn't tell us it would be this painful, and she'll probably get assassinated or impeached or who knows what.
Once again, it's Robert Kiyosaki of the Rich Dad Radio Show. We're talking to legendary investor Jim Rogers, a person that Kim and I always look forward to listening to and talking to. We're with Jim as well as Steve Forbes and James Dale Davidson in Washington, D.C.
Many years ago.
And they were forecasting a lot of what is happening today. So it's kind of interesting for Kim and I to be talking to Jim in his home in Singapore because he's calling it pretty hard. I mean, he is calling it harder than anybody of his stature who has said it the way he's saying it. So please pay attention and then follow his advice. You have to do what you know how to do. And if you don't know how to do it, probably don't do it. But there's also always some good news when things happen. And I think Jim's given one bit of it is the U.S. dollar, although it shouldn't, will probably get stronger because the dollar is safe haven. So that's why if you're in euro, convert to dollars. If you're in, yen, convert to dollars. You may have a better chance of survival. Everybody can do that. But to short a stock and do some of the things that other people do, you shouldn't do. And for Kim and I in 2008, that was the best time for us because we're real estate people. And they gave away the best real estate in the world for pennies on a dollar. And that's why we're kind of standing aside waiting for a similar type of action when things crash. So we're talking to Jim, and the one question which I've asked many of our guests before, I don't understand negative interest rates. Why would a bank say you have to pay us to keep your savings with us? What's happening?
Robert, it is more of the disaster that's facing us. These negative interest rates are being set interest rates are set by central banks for the most part. The market is more important, but still central banks are a big player. And the central bank in the United States has told people that interest rates should be zero, and we've driven interest rates to zero in the U.S. Now, that's destroying the people who save and invest. You grew up being told to save your money, invest for the future, and everything was okay. Well, all the people who did that are now being ruined because they're not getting any money on their interest. And they're being ruined, by the way, to save the people who went and borrowed huge amounts of money. But this all starts in Washington with the central bank, which is called the Federal Reserve in the U.S., who said that we should have low interest rates to save the world. Other central banks around the world said, hey, all right, let's do it too. If America says it, let's do it. This may sound harebrained and crazy. That's because it is harebrained and crazy. It has not worked. And that's what's going on. And it's going to get worse because as the economy gets worse, these guys don't know anything else to do except print money and drive interest rates deeper into the hole.
Once again, it's Robert Kiyosaki, the Rich Dad Radio Show. We're talking to Jim Rogers. He's the author of Street Smarts, Adventures on the Road and in the Markets, 2013. A Bull in China, Investing Profitably in the World's Greatest Market, 2008. And the book that Kim and I love, Investment Biker, is so you can listen to the program again. Especially this program when you get into some of the thoughts behind the thoughts of this great man, Jim Rogers, who is coming to us. He's an American, but coming to us from Singapore. So one of the questions I asked Jim is, how does negative interest rates, we've never been here before, they want us to invest, whatever they're trying to do, but how does that affect pension plans and insurance companies and all these people who are counting on some kind of interest rate? How does that affect them?
Robert, I want to repeat, you should be very worried because right now, all those pension plans that people have been relying on, most of them are insolvent. They cannot meet their obligations down the road because they've not been able to earn any money. Then you look at insurance companies. Insurance companies have assets which they use to pay you off when you have a claim. Many of those are having the serious problems. Then you get to an endowments, university. Pick a university, pick anybody, pick a hospital. Many of them are underwater now because they have not been able to earn any money. This is not just something that people can talk about on the radio. This is going to have dire, serious consequences for everybody who hears this, and it's having them right now.
So if I'm, let's say I'm at 50s and 60s getting ready to retire, I should be worried?
You better be very, very worried if you're in your 50s and 60s getting ready to retire. If you're in your 30s, you better be very, very worried, no matter how old you are, because we're going to face consequences, the likes of which we have not seen in any of our lifetimes.
So we have no idea once this hits how long this will continue, because we've never been here before.
Normally, Kim, in the past, in our lifetimes, these things have lasted a year or two. But in many times in history, they've lasted 21 years, or 22 years. You've had very long periods when you've had dire economic conditions. I hope it's 2 years this time, but I'm afraid it's going to be worse. It's going to be long, serious bankruptcies, turmoil, countries collapsing. That usually leads to war. And, we haven't had serious war in our lifetime, but I'm afraid we're going to.
One more question that you said interest rates will go up. How can they go up, and why would they go up? Can they just artificially prop them up?
They have, and they can, and they have, but eventually one of two things is going to happen, Robert. Either the central banks are going to come to their heads and say, wait a minute, this is ruining a lot of people. We just talked about it. A lot of people who save and invest, pension plans, insurance companies. We're ruining a lot of people, and we got to change. Now, some, to my surprise, there have been a few on the central bank, on Federal Reserve in the U.S. who started saying that. Guys, we cannot keep doing this anymore. Either that's going to happen, they're going to come to their senses, which is unlikely, or the market is finally just going to say, we're not going to take this garbage anymore. We don't want this paper money anymore. We don't want these printed dollar bills or other current euros or whatever they happen to be. You're going to have the market, you, me, Kim, all of us, come to our senses, and that will be the end of it. And that is going to be really, really horrifying, because if the market throws these guys out, the market is pretty vicious. The market doesn't have to answer to anybody, and they can be very, very vicious.
So, Jim, let me ask a very we're a little stunned right now. We're a little stunned. A very basic question, because they keep talking about propping up the economy, but what they're doing is they're propping up the stock market, as if the stock market is the entire economy, which, of course, doesn't take into account jobs and unemployment or food prices or small business. So how does propping up the stock market prop up the economy? I don't understand it as a strategy.
I'm delighted that you've noticed that. In the old days, as recently as the 60s or 70s or even 80s, the last smart guy we had running the central bank, he's gone now, but he came in the 70s and he said, I'm going to destroy inflation. I'm going to do whatever it takes. We're going to have sound money in this country.
Was that Volcker?
He was head of the central bank till 1987. Then he had to leave. And along came a guy named Greenspan, followed by a guy named Bernanke, followed by a woman named Yellen. And all of these people think that what they have to do is watch CNBC, and then they'll know what to do. And they determine if the stock market is up, they say we're doing a good job. If the stock market's down, they panic, try to do something else. It is never in world history have you had a central bank anywhere in the world, except in the last 30 years in the U.S. and therefore other countries, guided by the stock market. Their mandate by law is to keep a sound currency. And then in the 1940s, it was changed, okay, and in addition to a sound currency, we have to maintain employment. So those guys are long gone, the ones who wrote the law and said it's got to be a sound currency and sound money. They've all gone to heaven wherever they've gone. They probably went to heaven because they said it has to be sound money. I came along later who said it doesn't have to be sound money. I hope they don't go to heaven. They don't know it. They just watch the stock market.
So they don't know what they're doing. Is that what you're saying?
I guess I haven't made my class self-clear. Absolutely no clue what they're doing. They're going by the seat of their pants. Occasionally, one of them will say, we don't know if this is going to work, things like negative interest rates or zero interest rates, but this is all we can do, and so let's see if it works. I'm telling you, it's not going to work.
I spent a lot of time with this young man who researched Zimbabwe, the collapse of the Zim dollar and all that. Do you see something that traumatic or that drastic happening, the collapse of the currency?
Well, traditionally, that is what has happened when it gets totally out of control. But not just Zimbabwe, it's happened in many countries. This is not Zimbabwe. It's not just an isolated case. There have been dozens in our lifetime of currencies which have totally collapsed. I doubt that the U.S. will get that bad that fast. Now, ultimately, of course, it could. So certainly, if we go and get into a serious war and they just go crazy. Who knows what can happen? But I don't suspect that's quite going to happen yet.
Okay. Once again, it's Robert Kiyosaki of the Rich Dad Radio Show. Our guest today is Jim Rogers, legendary investors. He's chairman of Rogers Holding. So this is kind of the next question on the horizon. You don't recommend gold right now, and why not?
Well, gold has gone up a lot this year, and I don't like to buy things going. I own gold. I quickly hasten to tell you I own gold, and I've owned a lot of gold. I've been buying gold for many years. I haven't in the past few years because it got too high priced. If it goes down more, I will certainly buy more, Robert. Don't worry. One reason I don't recommend gold right now is because it's strong, and I own it. I own plenty of gold. I would also point out, if you look at the futures markets, you can see that the speculators own more gold than they've ever owned in the history of the world. That nearly always means that something is going to cause it to go down. As many people rely on that single indicator more than anything else, and when you see huge positions, long positions by speculators, they're nearly always wrong. Everybody else owns it, and I've learned in my life that when everybody's on the same side of the boat, you better go to the other side of the boat for a while.
Good point.
That's very good.
So I can't leave the show without asking you the one question here about, the Brexit was one of the reasons for Brexit vote was they were very anti the government, anti the establishment. You've got now the rise of Donald Trump as anti-establishment, non-politician. What do you think? Is that a trend that's happening throughout the world? And what's your take on Trump
It's happening everywhere. When things start going bad, people look for a man or a woman on a white horse with simple answers, and they often come to power. They start implementing their simple answers, and they usually wind up in disaster. If Mr. Trump if he wins, and if he does what he says, it's going to lead to bankruptcy and war. I mean, all you got to do is read a little history, and you'll see that anybody who starts trade wars with everybody he knows, that always leads to bankruptcy, always. And bankruptcy and turmoil and disaster frequently leads to war. I'm not very happy about saying all this, but
because he's talking about 45% tariffs on Chinese goods and things like that. Is that what you're talking about? Could lead to end of trade between nations?
Imposing trade wars with China, with Mexico. He's going to invade Mexico to get back at General Mills, who moved a plant to Mexico. No, I'm just talking about what he says he's going to do. Now, I have no idea if he's going to get elected or if he's going to do what he says he's going to do. But if he does what he says he's going to do, read your history. Don't listen to me. Read your history.
So one last question about Trump, then we're going to get off that subject. He says the U.S. cuts bad deals with China. Is that right?
Well, China's our largest trading partner and our largest creditor. I'm not sure what bad deals he's talking about. He himself has made many deals with having his products made in China, as you know. So I don't know what he's talking about. If he's talking about that he made bad deals with China, then he's the first culprit. But I don't know what bad deals he's talking about with China and the U.S. government. All countries have opened up. China has joined many free trade agreements with the World Trade Organization, et cetera. But like much of what Mr. Trump says, he doesn't know what he's talking about either. Sounds great. Oh, gosh, that's right. Those horrible Chinese. It's their fault.
Any comments on...
But just the other thing you must learn from history, Kim, is that when things go wrong, people look for a man or a woman on a white horse, but they always blame the foreigner.
Do you put
you get ahead is to blame the foreigner. They have different language, different skin, different religion. They smell bad. Their food smells bad. I mean, some of the stuff that you hear, and I've heard it repeatedly, you blame the foreigners and you look for simple answers.
Is that what...
Here we are again.
Here we are.
Okay, final question. Any comments on Hillary?
If she does what she says she does, it's going to be disaster, bankruptcy. And the bankruptcy in the next few years, as we've discussed before, is going to be worse than in our lifetime. And that sort of economic...
Our guest was Jim Rogers, a gentleman that Kim and I have followed for years. Ran into him, went to listen to him in Washington, D.C. with Steve Forbes and a bunch of other dignitaries, all predicting what's happening today. And Jim Rogers is the first person that's ever said the word war. And I'm afraid he's correct because Kim and I heard it again yesterday. This gentleman from Switzerland was talking about, he says, Europe is preparing for war right now. And one of the reasons that's frightening when England breaks away from the EU and all that, one of the reasons for the EU is because France and Germany have always fought with each other. So war is on the minds of many people outside of this country now. And for Jim Rogers, again, his website is jimrogers.com. Please read his books and things like this. But to mention war, it's always a possibility because Putin's already doing that. War is a way of taking our people's minds off of our problems. So by saying, oh, it's the Russians that are causing problems, or the Chinese or North Koreans, we as Americans kind of forget about our problems and we go defend ourselves. But it's not an accident there's war.
And I just want to thank Jim because this was pretty sobering, this interview. Please listen to it again. His website is jimrogers.com. And I think, Robert, he's one of the few people who has a more negative point of view on what's coming down the road than you do. And he said it many, many times. He said, you should be very worried and you should be prepared. So listen. Be very worried and be prepared. That's his message. And
also his biggest message was you have to do what you know. So don't go into, things you don't know, like we talked about shorting a stock. If you don't understand what that is, just because a stock price is high doesn't mean you go short on it. So this is the reason we have Rich Dad Radio, the Rich Dad Company. We're a financial education company. We do not make recommendations. Also, he spoke about gold. Now, Jim has a lot of gold. Kim and I have a lot of gold. And it may be time for you to get some gold, but you have to decide that yourself here. So we don't make recommendations. So you can submit your questions to Ask Robert at richdadradio.com. And as Kim says, this is a very sobering declaration from Jim Rogers that war is probably coming up next, and then the collapses. These despots arise when the economies come down. So what's your first question, Melissa?
Our first question today comes from Ryan in Bakersfield, California. Favorite book, Rich Dad, Poor Dad. He says, Robert, how do you view the impact of Brexit? Is this the end of global institutions?
I think Brexit is just the beginning of the end, or the change. It's the beginning of the end and the start of the new. I mean, whatever you want to look at it that way. But I really hold it is that the English people said to hell with the politically and financial elite of Brussels, of Europe. See, the EU is very different than America. The EU has 28 central banks, 28 different countries, 28 probably different languages, and a whole sets of other problems. And they were sick and tired of the elites like Obama and Clinton telling people what to do. Like, I couldn't believe it when Obama said to the English, you have to go to the back of the line. I mean, who the hell is Obama? He is an American president. Why is he giving orders out there? I mean, he's one of the worst presidents we have ever had. Kim loves him, of course. But anyway.
Excuse me?
But who the hell does he think he is? And I think that's what I'm speaking up against, is the English are sick and tired of this politically elite telling people what to do, that they know better than you. At the same time, they're ripping off everybody. They're just ripping us off. Any comments, Kim?
Well, I think one of the most eye-opening things with the Brexit vote is the people have voted for something they have no idea what's going to happen. They have voted for the unknown versus more of the same of what we know. So they're so sick of what they know and they're so sick of what's happened, they're willing to jump off the cliff and just see what happens because they want something different. Now, that's what's happening in the U.S. right now.
And when we talk about the politically correct, they're talking about like Clintons, I mean, they're...
Yeah, that's why Trump is doing...
And Trump is angry
is
at
rising
him.
Right now.
He's going against the GOP, the grand old party, and it's very old.
Very old.
And, Romney and McCain and all these guys, they should get out of the way, really, and that's what I have to say. But also, they're in cahoots with the Federal Reserve Bank. This guy Bernanke and Greenspan, exactly as Rogers talks about, and now Yellen, they're all there ripping us off, ladies and gentlemen. And once you can realize that, and it started a long time ago, around 1971. But then Greenspan came, Jim talked about Volcker, who crushed inflation. And then came this guy Greenspan, who was such a needy guy. He wanted the love of the Wall Street bankers, So he did anything they asked. So there was a thing called the Greenspan put. Every time the market went down, Greenspan would bail him out. Well, that doesn't do it good for you and me, but it does good for Greenspan's ego and Bernanke's ego and Yellen's ego. So that's what Brexit is about, and that anger is probably going to build in America. I've been angry about it for years.
It is building in America. It's
They're
building around
ripping
the world.
us off. That's why we have these teachers' unions with no financial education. Why don't we have financial education in school? Why? Those are the questions I've been asking. That's why Rich Dad has been around for all these years, because we can see this coming. That's why we went to meet with Jim Rogers and Steve Forbes, who says the same thing. This guy, James Dale Davidson and Lord Rees-Mogg, the head of The Economist. We're being ripped off, ladies and gentlemen, and Brexit means we're sick and tired of them ripping us off. That's what it means. Next question, Melissa.
Our next question comes from Eric in California. Favorite book, Cash Flow Quadrant. He says, Robert, I've been starting to buy silver, but I cannot afford to buy large quantities. Copper is much cheaper, and I can buy larger quantities. Is copper as valuable as silver or gold in terms of insurance against a currency crash?
Look, I would never use the word "I can't afford it." You're a poor man. Words do become flesh. You say I can't afford it. You have to look at value versus price. Just understand this: copper is a commodity. It's used in plumbing, electrical. It's important in a growth economy, but it's a commodity. Silver is a commodity plus a precious metal, and gold is money. So rather than trying to buy cheap, I would go for the real thing and buy some gold. And Jim says he's not buying because it's expensive right now. But Jim and I and Kim have been around buying it for years. I've been buying it at $80 an ounce. I'm still buying it. And I don't buy gold because I expect to make money on it. I buy gold as an insurance policy, like I have insurance on my car. I don't trust our government. I don't care if it's Hillary or Clinton or Trump or any of these guys. I don't care. It's the EU and all this. I don't trust our political leaders because they sold out years and years ago. Again, that's why the Rich Dad Company was formed. They sold us out. And you still want to trust them? So if you trust them, open up your little dollar bill and say, "In God we trust." What a lie that is. In gold I trust, but not God on this Federal Reserve note. So you better wake up and understand there's people who are working against you. If you understand that, then you'll go and find somebody you can trust, and I trust gold.
And I would just say to Eric, I think it's interesting. He's saying he can't afford, which I agree. Don't say you can't afford. But so he's looking for something cheaper. And all I know, every time I scrimped on quality, it cost me. That's all I have to say. Yeah. Next question, Melissa.
Okay, our next question comes from Daryl. Daryl lives in the UK. Favorite book, Rich Dad, Poor Dad. So he says, with the ever-increasing replacement of cash to digital currency in the financial system, how do you see the place of gold and silver in practical uses as an alternative to conventional currencies? Can we expect new currencies to emerge backed completely by gold, for example?
I think you're talking about cyber currency like Bitcoin and things like this. The issue with money is trust. Always remember, it's trust. If you don't trust the bank you're doing business with, then don't take their money. So it's coming down to that trust is eroding all over the world right now. And the reason I like gold and silver is because I trust gold and silver. I don't trust our politicians. I don't trust our bankers. And I don't trust, the system right now. So you do what you want to do, but the issue is trust. Is cyber currency going to save us? If and only if it has trust. Any comments?
Well, and then he was also asking, do you think there would ever be a currency fully backed by gold again? Do you think?
Who knows?
I mean, people are always fighting for it, and what we keep hearing is if that were to happen, an ounce of gold would be worth like $50,000 or something based on the amount. So I have no idea.
No.
There's a lot of information out there.
The point here is right now the issue is trust. Who are your friends you trust? Who are the people you do business with that you trust? The Rich Dad, we have our advisors we trust implicitly. We don't go very far outside of that group. Many people call me and they want to be my friend and all this. I don't need any more friends. I don't want to work around and try and trust somebody. So really that's the issue. The most valuable word at this time in history is trust. Steve Forbes said it best. He says, when the dollar went off the gold standard, trust went out the window. And that's why we have so many problems today. People don't trust anybody because they don't trust their money. So that's why you got to find people you trust, people you can do a handshake with, and you know your fingers will still be there. Last question, Melissa.
Our last question comes from Tashika in North Carolina. Favorite book, Cash Flow Quadrant. She says, if the U.S. dollar is on the verge of crashing, is it best to finance your personal home or pay for it with silver and gold?
That's a question only you can answer. I wholeheartedly agree with Jim. It's number one, you better be afraid, and it's time to be afraid, so it's a good time to ask that question. But you've got to do your own research and your own study. So Kim and I use a lot of debt. Jim doesn't like debt, but Kim and I practice using debt. So do we also have gold and silver? Yes. Do we have our houses with debt? Yes. But we also have enough gold and silver. If push came to a shove, we could convert gold and silver to pay off the mortgage. But that's our answer. You got to find your answer. Any comments, Kim?
So you got to do your education. You got to get prepared. As Jim said, be very worried and be prepared. And that's up to you.
And the Rich Dad Company, with Rich Dad's Coaching, I have Rich Dad's Education. We offer courses on shorting, on stock options, on real estate and debt, and all of those things. So just go to Rich Dad Coaching or